Hello, this is Kirill from forexboat.com and welcome to this 22nd tutorial on algorithmic trading for beginners. And today we're going to be talking about rule-based decisions. If you recall, in the previous tutorial we spoke about algorithmic trading systems and how they were called expert advisors in MQL4. We also found out how they're structured on the inside, what functions they incorporate, and basically how they work from an execution point of view. Today we're going to understand what we will be putting in the body of each of our expert advisors, how we will tell the robot how to correctly understand when to open an order, when to close an order, and when to take certain actions. That's basically rule-based decisions. So rule-based decisions are a way of analyzing the market, and it is the predominant approach to automated trading systems, and basically even most of trading strategies are rule-based trading strategies. It was quite a challenge for me to find out what other types of strategies or decisions there can be, and I've outlined a few, and I don't know if you'll agree with this, if they can be separated into their own classes. But for example, random decisions are not rule-based decisions. So when an expert advisor or even a person makes trading decisions at random, that wouldn't involve any rules behind it. And then say a self-learning algorithm like a neural network, that's a much more complicated complex expert advisor, which learns from its own mistakes and redevelops itself. In its core, it would have rules around how it redevelops itself and how it learns from its own mistakes, and from the market, etc. But in general, I would probably say that that's not a rule-based decision system, or at least it's not a simple one. And of course, informed decisions, those are most definitely not rule-based decisions. Those are just when you have some information, when you know that somebody told you that your dollar is going up, or you just have some sort of information and you don't have any rules around it, you just act on it right away. But we will be talking about rule-based decisions, and that's how our automated trading systems will be structured. And on this slide, as you can see, I've outlined three main types of rule-based decisions which we will be talking about. That is price rule-based decisions, time, decisions based on time, and decisions based on indicators. Of course, there are other rule-based decisions or ways you can create these things. And for example, one of them is funds. You can base your rules around how much money you have left or how much money you have earned, and that's going more into money management. But in this course, we won't be talking about that. If you do want to find out more, you're welcome to have a look at another course which I'm developing at the moment, and it'll be a bit more advanced, or it'll be the next step from this course, or it'll also be on algorithmic trading systems, but it'll have much more depth to it. So let's have a look at, for example, price-based decisions. These decisions involve, or these rules involve, a very well-known domain of the forex market for traders, and that is patterns, candle patterns. So we'll just quickly go to the terminal and have a look here. So for example, we could have a rule that if we see a large candle, like so this one is 33 pips, or from open to close it's 30 pips. So if we see a candle over 20 pips, then we make a transaction. Say for example, if the candle over 20 pips is a bullish candle, so goods going up, then we will sell. So in this case we would I'll just zoom in a little bit more. In this case we would sell, and we could earn maybe around 10 pips or something like that. And say if it's a bearish candle, I'm just trying to find one here. Here's a bearish candle. We could say we buy, and in this case we would buy, and maybe we would earn 7 pips, or maybe we would lose some money, or maybe we'd go up. So basically that's a very simple rule-based decision. Now I'll just switch over to candle view so we can better see the candles. The white ones are going down, the black ones or the hollow ones are going up. Say we could have another rule that if there's a candle at the top, like a fractal like that, if we find a candle that is a turnaround candle, then we sell. So for example, here we have a candle going up, then a candle at the top, and then a candle going down. So here we would sell, meaning that would tell us that there's like a turnaround point, or something of that sort. So basically prices and also price-based decisions are not only limited to candle formations, they can also involve like price levels. So here, say we know that let's have a look somewhere here. There should be a price level of 13600. So here we can have a rule, for example, that if the price goes through this level here, if the price breaks through this resistance line, then we sell. And let's see what would happen. So if we sold here, for example, and we waited long enough, we could earn like 20 pips. And so that's another way of setting your price-based decisions. So let's go back to the presentation. That's generally straightforward. Next type of rule-based decisions that I would highlight is time decisions based on time, and they could be as simple as we do not trade on Fridays. And that's not because Friday is the end of the weekend, everybody wants to go home and have a rest before or start the weekend early. Not at all. It's a very legitimate. It's actually a legitimate rule, because the non-farm payrolls and unemployment rates in the US, those are two fundamental pieces of news. They come out on every first Friday of the month, and usually they cause very volatile movements in the market, and you probably don't want to trade during those volatile movements unless you have a specific goal of trading those two those two releases of market news. So therefore I generally try to avoid trading on a Friday, and plus also that helps you prevents you from having open positions going over the weekend and possibly getting being affected by any gap in the market that can occur on a Monday. We'll have a look at another example, so it's not limited to that. Let's, for example, look at the British pound dollar chart for a change. So I'll just switch that off, and let's so you're looking at the chart, you can't really tell what's is there any time related correlation or time dependencies here. But if we switch on the period separators, which will show us, so every period between two periods, there should be 24 candles, and that because we're on, that is 24 candles, and because we're on the 1 hour chart, that means that each period is 1 day. If we look closely and we zoom, let's actually stay at this level of zoom. If you look at the start of every day, there isn't much movement. The market is generally flat at the start of every day, and the big movements, they always happen in the middle of the day based on this time zone where the trading server is located. And so here again, you can see that most of the movements, they don't start right away in the beginning of the day. They do sometimes, but statistically they occur in the middle of the day. So we could have a rule saying that we either do not trade in the middle of the day, or on the contrary, we trade in the middle of the day, and we look for movements there. So we can tell our algorithmic trading system when it should and it shouldn't engage the market. And finally, indicators. Well, this is a very common one. This is where we look at different price indicators and we base our decisions on that. Let's have a look at quick one, moving averages. It's 14 is fine. I'll just make this a bit bolder. So that red line is a 14 bar moving average of the close price, and we could have a rule whenever the price crosses the moving average, then we open a transaction in the direction of the crossing. So here we would sell. Here we basically, these are not favorable crossings for us, but here, for example, the price crosses and we buy. Where's another good one? This is a basic rule, so you would have to add some exceptions or filters to it, so you don't pick up all these noisy signals. But say here you could, if we buy here and we hold until it actually crosses again, we could earn some pips once more. And so that's a rule around indicators. And those are basically the ones that we intend on working with. I'm not sure yet how our strategy will play out. I haven't finalized it yet, but we'll see how we go in the next tutorials. And finally, I just wanted to show you a blueprint of a trading system, and this is not our trading system. We'll be talking about our trading system in the next tutorial, but this is just a one of the trading systems that I worked on some time ago. And as you can see here, it has the init function, dinit function, and the start function. And without going into detail, I just wanted to show you the way the rules play out. So if we take this red sub algorithm here, we can see these rhomboids, or these weird shapes here. They ask a question, and that is your rule. Basically, that is where you ask. So does an order exist? If an order exists, then just do something. If an order doesn't exist, then do another check. And here, if is the bid price lesser below the red line, then if no, then just do some updates. If the bid price is below the red line, then you open an order. So basically, that's how a rule-based decision looks in a trading system blueprint. And we'll be doing like a similar one up, but a more simple one for our trading system. But generally in the code, this is where your if and else statements go. So if something, then if it's a yes, then do that. If else, then alternatively, the alternative to if is the else statement operator. If so when you say else, then that means no, and then do this. And then again, if it's a yes, then do this. If it's a no, so else, then do this. And that's where the power of the if and else statements proves itself. And that's why I mentioned that it's a very important part of this programming language, MQL4, because on the Forex market, we have to make a lot of decisions, and basically our trading systems are all just full of these decisions when it tries to understand what's going on and what it should do. And so we'll be seeing much more of those. So that's that for today. Basically, we didn't code anything, just we were preparing for the next step so we can flow smoothly through the next tutorials. And I do hope to see you in our next session. And until then, happy coding.